Let's talk about CAMS. CAMS Insurance Repository Services has launched Bima Central for insurance portfolio management. To discuss more on this and the growth outlook, we have Anuj Kumar, who's the MD of CAMS, joining us. Thanks a lot, Mr. Anuj Kumar, for joining in. Always a pleasure speaking with you. Let's talk about this, e-insurance platform itself. With the IRDAI's push on e-insurance, what do you think is the growth potential? What are the customers number of customers that you plan to onboard on this? And I believe you were looking at break-even in this quarter itself. Will that happen?
Hi, good morning. Thanks for having me over on the show. So overall on e-insurance, I think when you look at the market broadly, the outlook is bullish. Of the total insurance policies available in the country, under 5% are under e-insurance right now because it is effectively not mandatory yet. It's more an individual consumer choice. As we launch platforms and as the overall the push from regulatory and market perspective increases on this, you can expect that this 5% penetration will continue to grow. So this market could scale several times. And we've been holding share in the range of about 35% in the market. So we're very bullish on this construct. And we believe that this market is set to expand.
You believe that the market is set to expand. So can you help us with some numbers when you talk about the expansion? I mean, what is the kind of growth that you're looking at? I mean, what are the customers that you're expecting to onboard? Because IRDAI has been pushing on e-insurance quite a bit. So, overall, what can we expect over the next 1 to 2 years?
So broadly, when this was launched several years back, it was expected that e-insurance holding would become mandatory. It is not in that state yet. The recent announcement means that insurance policies could be held in the insurance account, could also be held in DigiLocker, or could be held in a PDF format. So it is yet not mandatory. But from a market perspective, from about a mass of 55 crore plus policies, just about 3 crore are held in the DMAT form. So that's about 5%, a 20x compounding of this entire construct can happen if ever this goes into mandatory DMAT, for which there is no announcement right now. However, individual consumers are preferring to hold their policies in the e-insurance format. So you can expect a high double-digit growth going here forwards. Also, in terms of being able to manage your data at a single level, at an e-insurance policy level, to do potentially digital lien marking, which will happen over a period of time. You could, monitor your maturity values in a single screen view. You could pay insurance premiums, lodge your claims. There are a lot of things possible in the e-insurance construct. It's very insurer-friendly, so to say. And as we've launched Bima Central, of course, we'll have to integrate all the 50 insurers. Today, there are just a few which have got fully integrated, but that process continues. And we believe this is the kind of benefit that has not been offered in the marketplace. It's a very unique platform right now. We're already beginning to see offtake in terms of transactions building up. So we are very bullish on this.
Yeah, but if you could put numbers on their bullishness, what do you think is the TAM for this? Since you said only 5% right now are e-insurance, there is a 95% upside in terms of market moving forward. What are the kind of customer numbers that you expect to onboard? And at what level does Bima Central start contributing meaningfully to your earnings?
Bima Central will contribute to earnings maybe in 3 or 4 years. Today, we're just spending money promoting it and making sure that consumers get a unique digital experience from that. So from a financial perspective, it will take several years for it to break even and start making money. At the base level, today, think of it as about 7.5 million policies, 75 lakh policies being held by us in the DMAT format. We're expecting that to grow by over 25 lakhs, so almost about a 35% growth this year. Also remember that in the base, a lot of consumers may not be converting their policies. There's a lot of new sale which is coming into this. That trend will continue for base policies to get converted. I think it just needs a strong nudge either from the industry or the regulatory side. On the new sales, which is between 2 to 3 crore policies every year, you will see that a lot of those will get sold in, under the insurance format.
Okay, got it. The non-MF business is also picking up traction. What is the kind of growth that you're looking at there, and what's the headroom in terms of margin improvement?
So last year we grew non-MF by 52%. If I counted on a constant base, which is without the Think Analytics portion, we grew about 38%. We are hoping to grow non-MF close to 30% this year. We're seeing all the tailwinds. Our KRA business had grown 90% last year. We're expecting that to scale beyond 30%. Our accent to sell to depository participants and brokerages has succeeded. We were a pure mutual funds player and we've broadened out, so that's a good play happening. Our payments business grew 26% last year. We're expecting that to grow about 30% this year. So strong tailwinds in both of them. And on account aggregator, we continue to put out newer formats of consumption, both on the wealth management, which is the personal finance management side, also on the digital lending, flow-based lending side. So those consumption patterns are quite evident in the marketplace. Our daily consumption of bank and other statements has crossed a lakh daily, which is a significant milestone, and we're expecting it to scale at least 2 to 3x within this year. So non-MF broadly this year should grow in the vicinity of about 30%. From a profitability perspective, we've been investing in the platforms for the last 3 years. Some of them will return to break even this year. So overall, our target is that at company level, we should drive non-MF to a 30% EBITDA line. That should happen over the next 4 to 6 quarters.
What about, since we're speaking about the insurance space itself, I remember you last time said that you are scanning the market for inorganic opportunities, mainly in the insurance and payment space. How far have discussions moved? Are there any at the advanced stages, something that we can hear in the near future?
I think you should hear something this year. I will not time it accurately, but you should hear something this year. I think there are very exciting opportunities in both the spaces. And with our accent on building non-MF and scaling it to 20% revenue contribution, we believe that the next step is to onboard a strong franchise from the market. So you'll hear something this year in terms of our next moves.
Guys, just before we let you go, just roughly, because you have about 600 crores of cash on your books.
Yeah, so I don't think we're going to make a big bang acquisition. It will not be a big bang acquisition where I have to go and borrow monies, etc. We will just fund what we have on the books to buy this. So it could be, in the range of, I would say, a few hundred crore in terms of capital outlay. And we will talk more about this as we get closer to the event.
Okay, thanks a lot for that, Mr. Kumar. Pleasure having you on the channel here. That's CAMS up almost 2.5% right now. But